As a landlord in Canada, it's essential to understand what qualifies as rental income and how to accurately report it on your income tax return. The Canada Revenue Agency, CRA, defines rental income as any income earned from renting property you own or have rights to use. We will look at the types of rental income, reporting requirements, and the specific CRA forms you'll need for year-end filing. This is not tax advice. It is recommended you seek professional advice for your specific matters. Rental income includes any money you earn from renting out property, which can be a house, apartment, room, office space, or other real or movable property. Whether you own the property individually or jointly with someone else, you are responsible for reporting all income generated by the rental. Here are some common examples of rental income sources that must be reported. Rent payments from tenants for residential or commercial spaces. Parking fees if you charge tenants for parking spaces. Laundry income if you provide coin-operated or other income-generating laundry machines in the building. Storage fees if you charge tenants for extra storage space. A rental income can be received in several forms. Cash or checks. The most straightforward form of payment, usually received monthly from tenants. Goods or commodities. If a tenant provides goods instead of cash, you must still report the fair market value of the goods as rental income. Services. When tenants offer services in place of paying rent, this also counts as rental income. For example, if a tenant offers snow plowing services instead of paying a portion of their rent, you must calculate the fair market value of these services and report them as income. Consider Sonia, a landlord who rents an apartment to Glenn. Glenn provides snow plowing services for the building's parking lot in exchange for a reduction in his monthly rent. Sonia would report the full rent she charges Glenn under gross rents, line 8,141, and the fair market value of Glenn's snow plowing services as other income, line 8,230, on CRA Form T-776. Additionally, Sonia can claim Glenn's snow plowing services as an expense related to her rental operation. To accurately report rental income, you must calculate it for the calendar year, from January 1st to December 31st. The CRA generally requires landlords to use the accrual method for calculating rental income, though the cash method may be used in certain cases. Under the accrual method, you report rental income in the fiscal period it's earned, regardless of when you actually receive it. Similarly, you deduct expenses in the period they are incurred, even if payment hasn't been made yet. Incurred means you either paid the expense or have a legal obligation to pay it in the future. This method is most common for landlords with accounts payable or receivable at the end of the year, ensuring that rental income and expenses are matched to the periods they're related to. The cash method allows you to report income only when it is received and deduct expenses when they're paid. This method is an option if you have little to no amounts receivable and no expenses outstanding at year-end. One consideration, if you receive a post-dated check from a tenant, include the income only when the check becomes payable. The cash method can only be used if your net rental income or loss would be nearly the same as with the accrual method. For clarity, the CRA prefers landlords to use the accrual method. The rental property's owner must report all income or loss associated with the rental. For properties with multiple owners, each owner's share of income or loss depends on their ownership percentage. Each year, the share reported should remain consistent unless ownership percentages change. When filing, you'll need to include the address of the rental property and the number of units rented. This information helps the CRA confirm the source of the rental income. On Form T-776, you should report any additional income from sources beyond regular rent. Premiums and leases. If you receive an amount for granting, extending, or canceling a lease or sublease, report this amount as other income. Examples of additional income that fall under this category may include payment for permitting a sublease or assigning a lease, or a premium paid by a tenant to secure a particular rental unit as examples. To report rental income and expenses, landlords use CRA Form T-776, Statement of Real Estate Rentals. Gross rents. Report all rent received in the calendar year. This includes rent paid in cash, by check, or through other forms of payment. Other income. Report additional rental income such as services or premiums. Make sure to use fair market values when reporting non-cash income. Lines for expenses. Deductible expenses such as advertising, insurance, interest on money borrowed, repairs and maintenance, property taxes, and utilities have designated lines on Form T-776. Ensure these expenses are accurately categorized to maximize deductions. For landlords who share ownership of a rental property with others, such as a spouse or business partner, income splitting is a common practice to reduce tax liability. The rental income or loss percentage you report should reflect your ownership share, and both parties must use consistent percentages each year unless ownership changes. Good record keeping is essential for accurate reporting. Landlords should retain all rent receipts and bank deposits, receipts for expenses related to the rental property, and documentation of any services or goods received in lieu of rent. Retaining these records for at least 6 years is required by the CRA, as they may request verification of income or expenses. Although filing rental income and expenses might seem manageable, many landlords benefit from professional tax assistance, especially in their first few years of renting property. An accountant familiar with real estate can help ensure all income and eligible deductions are correctly reported, potentially saving you money through tax strategies like income splitting and capital cost allowances. Reporting rental income to the CRA is a responsibility all Canadian landlords must take seriously. From rent and parking fees to other sources of income, landlords must report all earnings accurately on Form T-776, while ensuring that any received goods or services are recorded at fair market value. With proper knowledge of rental income types, calculation methods, and reporting requirements, landlords can comply with tax obligations and potentially benefit from deductions to retain more of their rental